While you guys are getting your questions submitted over in our intensive group chat thread on the community site, I'll go ahead and pop over to the charts. I've taken no further trades, but we'll just kind of just give a quick midday update. Excuse me. We've in terms of our prep, which I'll spare us from walking through again. We've only had one real interaction with the level, with an actual that's funny that it makes it look like two. I guess, technically it was a couple ticks away. You could say it was close. But look how compressed the range is today compared to the ranges we've been seeing. This is we knew today was a C narrative type day at best. I should have joined some of my students in making some money today. I chose to be an idiot. We'll get to that in the review. But in terms of the day, the opportunity set that we had today, it's extremely limited. The market's just not given much for anybody to do really much of anything. In terms of what we're seeing right here, well, once we were working this short and the imbalance failed, nothing's happened. We reached the other side, if you will, essentially tested that, CVA structure again, almost the other side of DVA again, and we've rotated in a rotational market back to the lower edge of today's balance and value. So, I guess the only thing that's kind of changed from the read pre-market is that we can now say that the weekly here on Tuesday, where the weekly DVA becomes usable, the weekly is now imbalanced down, as somebody was asking. Savas was asking. What do we see from here? Well, nothing has changed, right? Let's go back to the most basic view. Let's take away a lot of the noise for you, and just look at what our prep tells us. Well, coming into the session, we were below, this area here. So it was the only thing that we could do early on was either short from there, or if we got above it, right, we could take that, right? Where's our hypos image? I think I have that somewhere. That's funny. It says there's nothing to show here. I guess if you leave up an image preview for long enough, it just gets rid of it. So here we go. Here's the screenshot from earlier when I did the visual hypos. One, which is what we got, not what I traded, but what we got. Two, there's the hold above, right? Like I just talked about. Three is just further away with the next areas. We could hold above here, we could hold below here, we could hold below there. And then four was we try to hold below here, pop back up and support there. What did we get? We got one. And nothing has changed. That's the point I'm trying to make here long-windedly, is that nothing has changed since this morning in terms of the narrative that's underway, right? We retested in B and then right at the transition of E and F periods. And, nothing's different. There's been no additional setups, nothing like that. So for NADRO, two ways to get short: extreme fade and balance pullback. I tried the extreme fade, which we'll talk about again in the review. I tried it twice. And then I tried to go with the imbalance that was attempting to set up here. That failed. The day's over, right? There's really nothing much else to do here unless you wanted to get aggressive here and try and kind of this trade again. Excuse me, I tried to go with the imbalance early. Enough of the review. That's where we're at. Nothing's really changed, and it's a very dull, dead type of day with very limited range and limited rotation sizes, a lot of bar-to-bar overlap. So anyways, there is the update. for today. Let's take some questions. Trader Biku says, what factors go into deciding your stop size for a given trade? For the shorts today from 07, you seem to be taking very tight stops around 2.5 points, similar to yesterday, whereas the IPB from 95 was looser, around 5 to 6 points. In terms of risk sizing, are you always trying to put on one full R per entry? If so, are you calculating the number of contracts to put on in real time, or is that something you have prepped in advance? Fantastic question. This gets to the heart of the way that I like to trade, the way that I like to size, the way that I like to take risk in markets. Multiple questions in here, so let's go through it. So what factors go into deciding your stop size for a given trade? You pretty much answered it. I look at how wide is the stop, right? Is it 2.5 points? Is it 5 to 6 points? It's not precise. As you saw with my imbalanced pullback stop, I said repeatedly, go listen to the recording. We're going to give this some room. We're going to give this some room. We're not going to be too tight with this. But I did not have a specific number in mind. We got to the point where we started hitting RTH VWAP, and I said, all right, that's it. The buyers are in control of the tape. We're taking over Delta Neutral. We need to wick this VWAP here. I don't want to see it go a tick higher. And it did, and I got out, right? So number one, it's not to the tick. I have a 2.5 point stop. I have a 5 point stop. It's not always that precise. A lot of times it is, but it's not always. But I'm still targeting an R value, as you alluded to. How do you target an R value? You simply say, all right, what's the general distance or maybe precise distance to my stop? What is the dollar amount that I want to risk per trade? That's your R value. And then you simply divide one into the other and you figure out how many contracts, and you round down, or round to the nearest whole figure, because obviously we can't trade, 6.7 contracts, just trade 7. Or, if you want to trade some micros to get those decimals in there, fine, but don't. That's how I do it. I like to keep my risk consistent. I don't know which ideas are going to work, which ideas are not going to work. I like to just keep that risk normalized across ideas. And then I like to size them appropriately to meet that R value. So that's how I like to do it. Yeah, great question. That gets to the nitty gritty of making some of those decisions. So for example, when I was initially getting short here, that was similar to a scalp we took yesterday, if I recall, where it was momentum based. Didn't I do that yesterday? Yeah. After the aggressive stop or scratch, I should say, I got into that momentum lot. I didn't size it big enough yesterday. I sized it big enough today. I was actually at these lows relative to the losses for the session. I had recouped, I want to say it was close to 2/3 of what I was down for the day into these lows. So anyways, I'm sorry, I wasn't even sharing my screen, but you guys recall that I was in the momentum short after, having taken the atrocious longs. And so I sized that bigger because it was a momentum based stop. It was a very tight stop, right? Listen, asked about the studies I'm using. You can use ECI VWAP under custom studies, but as far as I understand, the built-in Sierra chart volume weighted average price is just as good these days. I just haven't switched over to that. Fab1 says, question regarding execution. Do you use limit or stop brackets for stop or take profit targets? How do you manage exits scales with Sierra? The way that I typically do it is while I'm in normal conditions where I'm not worried about liquidity, I'm not worried about crazy volatility or news going on or massive headline risk or whatever, I will simply bang in with my hotkeys keyboard with market orders just to get into the position. I will have no brackets, no targets, no stops, nothing. It's all just manual. Some people might call me stupid for doing that. They might say that it's just, you should never trade without a hard stop. And I don't have a problem with their opinion. It's certainly not going to, affect anything unless you're trading larger, I believe. The larger I trade, the more conspiracy theorist I get about people having visibility into what I'm doing. And so I don't want orders out there a lot of times where people could potentially see what my plans are. It is what it is, but that's neither here nor there. So I think, to something I'd recommend to you, if you want to give yourself that amount of flexibility within Sierra, put on, almost like an emergency stop bracket, just something that's really, really wide. And then you can dial them into where you want them or whatever. But it's at least there in case there's, some kind of a flash crash or whatever. It's not a bad idea to do that. But to answer your question, what I'm typically doing under the most normal conditions is I'm just market ordering in, market ordering out. Occasionally I'll throw up some limit orders into an area that I feel is going to be very competitive to get those fills. I will put some scale outs with limit orders. Very, very rarely will I enter with some kind of a buy stop order. A lot of times, again, it's manual market order. But there is, I would say, over the course of my career of trading, there's probably been more times where I have traded with bracket orders attached to entries and really just kind of place those where I want them. But what I'm doing now, I'm just answering your question. If there's any further questions on that, just follow up in the thread there. Brad says, as a NADRA student starting week 3 and having watched the video lesson, would a short from composite value low at 07 and developing value high around 10:17 a.m. have been a trade at the hard right edge? 10:17. 10:17, unfortunately, my time. I'm going to check Eastern, 11:17. No, both 10:17 and 11:17 are in the middle of DVA. So I'm not sure what to tell you there. It's not around developing value or high. There's two times, just so we get on the right time zone, Brad. For my central US time, we essentially touched it where I was shorting around 9:11 to 9:17. And then we were very, very close to the same area at 10:39 central. So those are the 2 times we were near the 07 level and at developing value area high. And that's ETH where we were close. RTH, both of those were at the +2 on the first instance, and then, the 1.5 on the second instance. So RTH was giving those extreme fade opportunities perfectly, which did factor into my, shorting before we got to the ETH level as well. It's kind of a stacked references talk there. So anyways, make sure you're starting your VWAP calculation from the session open, not from like midnight or something. Sounds like you might have a DVA calculation issue. Brandon says, how big are your rhythm TPs? I'm not sure what, well, there's only one thing that typically means, and it's not toilet paper. It's take profits. Look at that. He edits it in real time. He's a wizard while I'm reading it. Unbelievable. Let's give him a like. Let's give him a fire emoji. Okay. Everybody's clicking here. Okay. How I don't know why that's so funny to me. How big are your rhythm and take profits in terms of R value? Around 1R, depending on your entry relative to stop and ETH rhythm. Those things have nothing to do with my stop, because sometimes, as we've discussed, I have a tight stop. Sometimes I have a wide stop. So I think it is an atrocious thing for a trader to do to take a stop based on to take profits based on the distance to their stop, right? 1R in this case, in terms of stop distance. It's a mistake to do that. There may be, for what I'm about to talk about, which is the actual rhythm read of the market and the volatility conditions you're dealing with, you may have gotten in really early in a turn, so you're able to have a tight stop. You may have gotten in real late, so your stop is wider. And neither of those factor into what we think that market is capable of either ebbing or flowing in the next rotation. What you did has nothing to do with what the market is doing. So I don't like when people do that. My rhythm-based take profit is based on, quite simply, the rhythm, right? You guys have seen me throughout the past 2 days say, okay, here's what I'm seeing in terms of rhythm. Here's medium-term rhythm, right? Here's my short-term rhythm read. Those are what I'm looking at and trying to find that like median of that distribution of rhythm things to make that decision. Nothing else. Trader has 2 questions. One, I'm wondering about your thought process for cutting trades. So we could bring up the seesaw again, right? I'm more likely to cut a trade in which I don't have strong conviction in the narrative and the opportunity set that's in front of me. I'm more likely to cut a trade that, and by cutting trades, I'm talking about scratching. So I hope we're talking about the same thing here. I'm more likely to do so when order flow's screaming at me that this really sucks. This is a bad deal here. I'm more likely to cut a trade where I have a vulnerability in terms of the market might need to do a stop run beyond an area that would be adverse movement against me. I might cut it, let it do the stop run thing, which I can trade good, guys. I promise you. You should have been there last intensive. Some of you were. I don't think we had a losing day. And I was doing things like that where I would cut the trade, saying there's a stop run coming, let the stop run its course, hop back in at the perfect time, catch a big winner. We haven't done that yet, but we got 3 more days. So those are things that I look at and that balances my decision making around scratching versus hanging in a trade. I feel like I missed the second part of somebody's question earlier. Going back to the first question we started on, yeah, well, never mind. They didn't actually ask a different question. Okay, where are we? Trader number 2 question. I've heard you mention the difference between strong buyers in the delta versus strong sellers being absorbed. Can you discuss what you're looking at in the delta to come to your conclusions? Yeah, I mean, if you have strong buyers, let's keep it apples to apples here. So I'm going to rephrase your question. Let's talk about strong buyers versus buyers that are being absorbed. Okay, let's do it that way. So it's the same direction in terms of aggressive order flow. It's up. The delta's headed up. Okay. Strong buyers is where you have price moving up and you have a significant amount of order flow behind it that says, hey, we're aggressively lifting offers and price is working higher. You know, it's a strong up move. Buyers are strong. Buyers getting absorbed is where you have that same delta push and price is not going higher. It's as simple as that. You have people paying the offer, buying, and the offer is standing. It's an iceberg. It's refreshing. It's so large, they're not eating through it. Whatever the case is, it doesn't matter. That's what's happening. Melanovel says, hey, Merrick, can you help understand when the imbalance down became established into the open? Yes. Let's pull up the chart. I will say it's here, right? I know this technically went to VWAP, but it's a brand new expanding DVA. When you have that brand new DVA, whether it's where the RTH one just begins to open up, right? It's still too early right here. You have to let it start to expand and develop. Because the overnight was so calm, barely trading and all, this was the first real move that starts to open up the DVA. You know, this was kind of a decent move, but then it was right back. It starts to expand at this point in time. Then we come up and we really make a good push down, breaking through contextual areas. I know that shouldn't make much of a difference, but it's a bearish type situation. We come up to where DVA is, where this level is. And I understand we push all the way to VWAP, but again, it's a new DVA. And so we give it a little looseness, we give it extra room, and we were clearly unable to hold back inside there. So I would call that imbalance down from there. That's where we established it. You know, this was further confirmation of that. And here where I stop out is where it starts to fall apart. We go rotational. Don't get me started on what happens next. We'll get to that in the review. I'm embarrassed with my my trading today. I'm not happy about it. Anyways, back to your questions. We answered this one yesterday. What are the differences in these? Oh, the settings for the composite and daily TPO. I mean, not much. The only difference is as we went through yesterday, the daily one, I do have the most recent overnight session. That's the only difference. Other than that, it's just the same kind of deal. I mean, it looks like the colors of the initial balance, which the reason they're different is because I never even pay attention to that, are different, but there's no differences. How do you determine if it's an A+ setup to add massive size to a trade? First and foremost, we'll go back to one of the original questions today around sizing and how I approach that. I may trade what some people might call massive size sometimes, but it's a consistent risk that I'm taking, right? So I don't load the boat. I don't put on crazy size or take on crazy amounts of dollar-based risk through bigger size. Just because I think a trade is A+ or whatever. I don't trade that way. I don't do that. Determining if something is A+, that's just narrative work. That's just something that we haven't seen here Monday and Tuesday. We haven't had that situation where the stars have aligned in terms of different time frames, fresh condition shifts. We haven't had that Monday or Tuesday here. So A+ is when we do get those type of things. Multiple time frames pointing either bullish or multiple time frames pointing bearish in terms of directional bias, fresh condition shifts, fresh breakouts of fresh CVAs, all those kind of things that go into that A+ situational trade thesis. Yeah, so Trader BQ does ask the question that I just went back a second ago and checked to see if he asked. He's essentially saying, like, why give something in this area a tighter stop versus something in another area a looser stop? It's a great question. I'm trying to think of all the variables here. Stacked references. Just jot down some stuff here. Stacked references stop runs. Needed or obvious retests. Order flow. That's at least a good start for us. So, well, versus, you know, excess or lack thereof. So stacked references is one thing. If we're trading into an area and there are 3 levels as we're coming up into this area, right? I might need to give it more room because I'm not so sure that this turn is going to be very the ultimate turn, because maybe this level up here is really important as well. So I might give that trade more room to just test those other areas. Stacked references. Stop runs, you know, there was a moment, I think, when I was long, I knew there was the potential for a small stop run through an area, and I needed to see if it was just going to be a stop run to this RTH VWAP here, I believe, or whether it was going to be more. Turned out it was more, and I exited after hanging on to the last minute. But if I see an area that potentially needs a stop run below it, sometimes I will scratch the trade prior to the stop run and then look to reassess and re-enter. Sometimes I will say, let's just allow it to work. And if it drops through here, it's going to need to say, hey, we were just a stop run, and then stabilize, right? And if it doesn't, and it kind of holds or flounders and then keeps trying to push lower, and depending on what order flow is doing, that's an exit. Needed retests, you know, that was part of the equation right here. I remember I drew this structural area. Let me clear this stuff. Well, I can't clear it all. We had this area that I knew that we could retest, right? We had these lows. And so as I'm short, I know that the market oftentimes likes to come back and kind of test that. I talked about that LVN, which was, I guess, kind of right here, right? And the upper end of this. So I knew that we could wick into here, and I needed to see us turn from there. So I gave it room to do so. This didn't need any room. The only thing we could argue that it needed room for was to go actually touch the upper extreme of DVA, which is, you know, minor compared to prior value, the TPO, the market profile CVA level, things like that. So there was enough there for us to take those shorts. Just needed one more reentry, and I would have never taken any of those longs. Anyways, order flow obviously can play a factor. You know, there's times where I'll allow a market to drift more against the trade if order flow is not, as I say, not scaring me, right? If order flow is scaring me, right, and maybe we need a stop run through an area or whatever, then I'll cut it quicker usually. And then if we have excess or a lack of excess, that can dictate what we do there as well. Let's put aside scratching or not scratching. Let's just talk about where we need to place a stop. If you got great excess that comes in and you time a trade, you can really you can lean on that excess very confidently that we shouldn't get back up there and start pressing those highs and remove that excess, right? However, if you come up and it's like, let's say it's a poor high in an area and then you time a trade, you really don't, we can't just place a stop right here. Like, that's just the sucker stop position. We would either need to give it more room, right, to wick that area and then for the trade to work, or you would need to cut it and scratch it if it starts threatening that area, let the wick play out, blah, blah, blah. So those are a lot of variables right there that I look at in terms of, do we need a wide stop here? You know, do I need to give something more room? There's times where, and one could have done this today, actually. Maybe some of you did, where you take either this short or this short, and you don't demand that the market goes in balance down. You give it full loose leash trade management, and you're keeping that stop up here. and you're still in this trade. You're still in this trade if you did that. Otherwise, you're getting more aggressive here, and you're demanding that it goes, and you're stopping out somewhere near where I did. Melon Novel says, apart from learning from the best and putting in the hard work to become a CPT, what are some other considerations, mindset required to leave a day job and concentrate on day trading? What's a reasonable starting capital? Is it better to join a prop desk? Please share your thoughts. Yeah, we could have spent the whole hour talking about this. I think that the mindset component around it is going to follow the situation. I don't think that if you're trying to, if you have no money in the bank, no savings, no cushion, you might can try to fake a mindset in terms of you're okay, you can do this. Don't put too much pressure on yourself, even though you know you have to make money trading to pay rent next month. The mindset's going to follow your situation in that case. Okay. So that's kind of a major prerequisite to before we even get to mindset. I teach all kinds of things about the mental frameworks that I believe that are required. If not required, then the mental frameworks that will make your life a whole lot easier as a trader. We can certainly agree to that. As you said, obviously the hard work has to be there. Reasonable starting capital. Again, you want to take a look at your hard, fast bills and what it takes, for budgets and stuff like that. And you want to have a cushion, right? You want to be able to not have to worry about this next trade, today's trade, this week's trades, have to make money, else I'm screwed, else I'm really in a bad position. You just simply have to, for you, it's not a certain amount of money. For somebody that might be, $250,000. For someone else, young, really low expenses, got roommates, cheap rents, not going out on to fancy dinners, whatever. That number could be really small, right? You could have, I don't know, 50K in savings, and you could feel comfortable for 6 months or, or more, whatever. That number is not important. What's important is arriving at what that number would look like for you and projecting out your spending and what would work. And then obviously the capital we haven't even gotten to the capital for the trading account. In futures, I don't think you need as much there. Obviously, if you're making a transition from leaving a job to trading full-time, you need to you need to have had some really good results for a period of time, right? 3, 4, 5, 6 months of really good results at a minimum. So at that point, you can have an understanding, or I just don't think you need a ton of money in the actual trading account compared to what people might say. If you're trying to trade stocks, you're going to need more capital, different things like that. But futures are so leveraged. Even if you have 100K, that's your trading capital, you shouldn't keep 100K in the trading account. You shouldn't give yourself the ability to lose all that in a single day if you were to go totally off the rails. You don't need all that leverage. You don't need all that. So be responsible about even how much money you keep in your trading account. Give yourself a couple of daily loss limits plus the margin requirement for trading. My desk traders, do you think I put as much money as I can in to fund their accounts, or do you think as a business owner I put as the smallest amount of capital to let them do exactly what they need to do, right? No, you put the small amount of money in trading accounts. That's just prudent. That's just how it needs to be done. So anyways, those are some thoughts. Now, when it comes to joining a prop desk, that changes a lot of these variables that we're talking about, right? You're not the one taking the dollar financial risk anymore. You're introducing yourself to trading with lower commissions. You're introducing having accountability, putting yourself in a more professional environment with peers, all these kind of things, which are just tremendously beneficial. It's almost just an entirely different conversation. So in my opinion, I'm a huge fan of prop. I've been in the prop world for quite some time now as a trader and as an owner, owner slash trader, you know, I still trade. I think prop is better than trying to just fly solo. And I sound like I'm just like casual about that opinion, but I know that it's true. I know that it's true. So I think prop is much, much better. And I'm not just saying that to try to get you to sign up for the tryout or something. Okay. I believe in what I do. And I think that's probably why a lot of you guys are here. You know that I'm a genuine person. Dovehawk says, since ES doesn't have an A+ narrative today, why don't we look at other instruments like crude oil? Is this intensive week focused only on ES? Yeah, I was kind of focused only on ES, but you're not wrong. You're not wrong. I think that, look, today's range, even yesterday's range, was way below average. It's the luck of the draw here, guys. We've gotten two kind of crappy days. Period. Day one, I remember talking about this a little bit, and I was saying my plan is to focus on ES. We can get away with it because there's enough volatility, which provides opportunities to at least scalp and do different things. Well, guess what? We got hit with some crappy volatility even and small ranges. I know we're expanding down into that 84 level now as we speak, finally tagging that next structural area. But yeah, you're absolutely right. When conditions get kind of crappy, that is how I trade. I will look at other markets and I will go find better opportunities elsewhere. And I'll think about potentially doing that as we go forward into Wednesday, Thursday, Friday. J-Rob says, when you have competing acceptance between PVA and DVA on a long-term VWAP, for example, like we have on the quarterly, very, very good, correct. How do you determine the likely destination? Is it the developing versus the prior? I tend to lean towards law of market dynamic 2 once we have acceptance inside prior value, but I believe you saw, the DVA's rotation and the likely destination. Is this due to the quarterly rotational versus imbalance? Number one, I tend to focus more so on the long-term VWAPs, the developing values rather than the prior. I mentioned that on Monday. That is my default thing that I focus more so on. Doesn't mean that I always do, but more times than not, the use case, the job description of those tools is more so about the developing than the prior. As I said on Monday, my favorite prior value is the custom composites that we build, and I think that does a better job than long-term VWAP prior value. So I focus more on those, and I focus more on long-term VWAP developing value. Okay, you get it. Beyond that, we were multiple times on your example, the quarterly, above, below, above, below, above, below the quarterly prior value level. That weakens the strength of that level. So I demoted it in terms of ranking and distilling that information. Sorry, playing with this golf ball, I just dropped it. But you're correct that there's dissonance there. You're correct that we have competing developing versus prior value narratives unfolding on the quarterly chart. It adds to the fact that we just don't have excellent A+ narrative right now in this market, especially given where we are, like in between those two. Trader says, since you're not using a stop or brackets, you're really good at quickly getting out rather than someone who would hang on to watch price hit their stop or let their account drain away. Yes, and I've learned that the hard way. I hang on for too long when I've had bad days, so I was just looking at advice there, seeing how quickly you get out, just to clarify. Absolutely. I have earned the right to take an additional risk, which is what it is. It's an additional risk that I'm taking, not having a hard stop in, forcing myself to be disciplined essentially in the approach and not hanging on to trades, not hoping they turn around, wishing, praying, being upset that they're going against me. I'm able to do none of that when a trade's going against me. Now, I used to be a nut job. I used to take too much risk from the onset. I used to not envision that the trade could possibly go against me. I was only considering how good the analysis was and how the trade was supposed to work. Then I get pissed off. I start to get adversarial with the market. I start to be in denial, not want to take the loss. Next thing you know, I'm down 3 times what I should have risked on the trade. And then it's too late. We might as well hang on. You guys know the drill. Okay. I don't do that anymore. I don't do that. So I don't have an issue with that. There's no problem in me banging out. I'm truly at the point where I know when I no longer want to have that risk on, and it's not a tug of war to do that internally. So that's where I'm at. That's how I'm able to do that quickly and without hesitation, without taking excessive risk, all those kind of things. For most of you, and where I was, 8, 9, 10 years ago, you better have that hard stop in. You better not move it away. In fact, you shouldn't move it closer most times either, right? People make that mistake too. Trade with the hard stops, have your brackets, but have your stops placed at areas that make sense, not just a fixed amount, because volatility changes. A 2.5 point stop might make sense on one day and it's suicide on another day. Okay. Have any AGMs, thanks, Mary, thanks for the guidance on the transition to full-time trading. Have any AGM students transitioned to full-time trading, and how long has their transition taken? Yeah, of course, we've had students transition to full-time. There's not a one-size-fits-all with almost any of this type of stuff that starts to really affect the person. Okay. I've got traders on the desk who still have full-time jobs who are still trying to make it. I have AGM students who are wildly profitable who have made that transition. But in general, just to give you like some kind of answer to that, how are we defining where the starting point is? As it like from I'm gonna give you an answer from beginner student to the point where they're confident to make that transition. I would say on average for those that have successfully transitioned, it's probably a year. It's probably 1 year from the time they say, let's start the NADRO course, to where they're at that place and that kind of confidence and that kind of skill set and trading prowess. It's not a quick thing for most people. You will never hear me advertise for Apteros, nor will I allow any of my people or any type of marketers that we ever use or anything ever say stuff like, hey, take this and you're going to be a great trader next week. because you're not. You're probably going to be a worse trader. If you've never done NADRO and you take a brand new way of trading in a course and you try to figure it out and apply it, you're probably a worse trader than you were the week before you started. And you're probably worse, a couple of weeks in or whatever. Sometimes you got to get worse before you can get better. If I want to be a better golfer, my swing has to get worse before I get better. You don't make a big change to technique in just about any arena of life and just get better immediately. That's just a very, very rare thing, and against the growth, the learning process. Do you ask desk traders to commit to the desk for a certain length of time in order to join? I mean, subconsciously, I ask any desk trader to commit for life. Yeah, I don't. The biggest risk that I take is to pour into people, to teach people my NADRO methodology and get them profitable, and then they go do that elsewhere. That's the number one risk that I face in my business. So I don't want a desk trader going anywhere. Call it selfish. I guess it is. I don't care. That's my view. Okay, we hit 84. We hit 84. The day is complete. Actually, the day's not complete. Before we end this call, let's hop over to the chart one more time. Take a look at what's going on. We just went into this level here after doing this. So an opportunity. Why does it do this? Look at this. The image is just gone. If you leave up the image for like an hour, it just says, yeah, there's nothing here anymore. That's such a weird Windows thing. So let me go find it, pull it up. So what's our opportunity sets here? Whoa, did you guys see that? That is so crazy. That's got to be a me problem, like a driver or something. All right, don't disappear, please. 3B is the next potential, followed by 4 from this level right here. 3B, if 3B fails, we can transition to 4. So we might have some trades into the close here, the last several hours into the close. Guys, great questions today. I really mean that. Very well thought out, some hard-hitting stuff. Sizing, trade management, stops, risk, making it as a trader, some really good topics. Thanks for being here. I apologize for my performance this morning. We're going to review it after the close. Cheers.